1,000 down to 3,500, and how is this sort of velocity supposed to sow interest by serious traders, or even get the coin exchanged on an official exchange here in the United States?
Well, Bitcoin's going to keep going as we see it, but there's a lot of pressure against it because it's replacing fiat currencies. And many people don't believe in the fiat currencies that are backed by nothing and printed on nothing. As Jamie Dimon just came out and said, that there's nothing there with Bitcoin. So what's there with regular currencies? So there's going to be government pressure. There's no question about it. But some governments are letting it happen, like Japan. So China will crack down. Other countries will let it go on. But as long as there's more cashless societies, we see more Bitcoin.
Okay, so you wrote in your latest Trends Journal that our society, as you just mentioned, is moving towards a more cashless movement. Your thoughts on that driving force? Do you think the fact that we care more about services, something that can provide us something more valuable than the physical object, has anything to do with this?
Yeah, let's go back to China again. Just people, they're not using cash. There's no "in God we trust." And then you're looking at more and more governments going cashless. So people don't have a connection to it. They want an alternative. They don't believe in their currencies. And then when you go back to China again, look what's going on. They just announced that they're cutting down these Bitcoin exchanges. Where is the yuan going? Oh, the yuan went way up. And what are they doing now? Exports are way down. So they're going to probably devalue the currency. The last time that happened, that's when you saw the big Bitcoin surge. So the Chinese are worried that with a cheap yuan, the people are going to abandon the yuan and go to a cryptocurrency. That's why we believe they're doing it.
Well, let's talk about some financial institutions well established like J.P. Morgan. CEO Jamie Dimon has said on multiple occasions Bitcoin is a fraud, but J.P. Morgan still helps facilitate Bitcoin-based transactions. Why would the head of a major bank call it a fraud and yet still allow the company to profit from it?
Well, if a major bank calls it a fraud, it's, they know a thing or two about frauds because 6 of the major banks were convicted of them. And what's really going on, I believe that Max Kaiser said it best, and he was one of the first people to identify the Bitcoin trend. Bitcoin makes banks essentially price gouging intermediaries and socially unacceptable leeches obsolete. Bankers rightfully fear for their jobs as Bitcoin replaces them. So just today, Jamie Dimon bragged about the value of blockchain, says they have digital dollars, but it's okay to have digital dollars backed by nothing and printed on nothing, but you can't have Bitcoin? It doesn't make any sense.
What do you think scares people more, the fact that there's such erratic behavior in the price of Bitcoin, that it's insecure, or that you can't actually pull it out and touch it?
I think what scares them the most right now are governments clamping down on it. And that's the message you're getting out more and more. Jamie Dimon just came out and said that again today. I think that's their biggest fear. Other people that, don't go into Bitcoin will go into a harder commodity like gold or silver. But again, you go back to the millennial generation, everything is cashless in their world. So a cashless coin is of a lot of value to them because, again, you have a guy like Jamie Dimon saying that their bank deals with digital dollars. So if they're dealing with digital dollars, why not deal with digital cryptocurrencies?
Last question. Do you think that there's going to be some point where Bitcoin and its relatives are going to be issuing some sort of currency for people to really get on board? Or is that defying the crypto nature of it? Will there be some way to pull it out and look at it?
I don't believe so. I think it'll stay digital. That's the attraction to it. And again, you could take it anywhere in the world. Suppose there's a crisis, and boy, we have a lot of them building up. You don't have to pack your gold and go. You could go anywhere, and you have your Bitcoin anywhere. So you don't want that currency of another nation, which may be under a lot of pressure. So we see it staying digital.
So talk to us about that. The article is cryptocurrencies, are they flying high or are they fading fast?
Well, the way we look at it, David, is that look what's going on around the world. It's bigger than, again, when you hear a guy like Jamie Dimon, talking about cryptocurrencies not being worth anything, I mean, this is a bankster. I mean, these are people that, you know, you want to talk about not worth anything. As you mentioned, how about the fiat currencies that aren't worth anything? How about, you know, the $15 trillion worth of debt the central banks built up to prop up the equity markets? How about, you know, David, I've known you a while, and you're really a nice guy. I got a deal for you. I have a 10-year bond, and because you're so nice, you're going to buy the bond from me, and in 10 years, when I pay you back, I'm going to pay you back less. It's called negative yields. Can't make this stuff up. Doing it in Japan. Hey, you know what? How about negative interest rates over there in European Central Bank? Oh, and who's the European Central Bank head? Mario Draghi. Where's he from before? Oh, the Goldman Sachs gang ran the Goldman Sachs division out of Europe. So the banksters are talking this down because they're the ones that are creating the fraud, and the smart people are looking for alternatives. Now, the downside of the cryptos, you saw what happened in China. All of a sudden, they said by the end of this month, they're going to start closing some of the exchanges. And it's going to be harder to do deals with cryptocurrency. Very important. And you guys are the first to hear it. The reason we believe, S&P just downgraded Chinese debt today.
Yeah.
The reason they're trying to stop cryptocurrency is because when cryptocurrencies, Bitcoin, really started to skyrocket, when was it? It was when the yuan, the Chinese currency, was down in the toilet. And people didn't want to keep losing their money, so they went into Bitcoin, and that shot the price up.
Yes.
So now,
and so when we look at things, when we look at the Chinese or the Saudis, and they're buying T-bills and everything from the Fed, it's not necessarily the government. As you just pointed out, the Chinese government, their debt is exploding, just like our debt is exploding. And so they don't want people to move their money into the cryptocurrencies. And that's what people were doing, you know, individual investors who are very wealthy in China, unlike the government that's now starting to run on a deficit just like our government. But these individuals who are doing really well, who are making money, unlike the governments, they're looking for places to put their money. And that's why they're trying to find a place where they can get value from it. That's why the cryptocurrencies are out there.
Exactly. So now what we're saying is the yuan has increased over 6% against the dollar this year. Their exports are down. What they're going to start doing is devaluing the yuan. That's the news. And they don't want the people to go into an alternative currency. Look, there's no global growth. And what are we looking at in the United States? We're lucky to get 2%, more of the Obama growth. The Bank of International Settlements is worrying now that if interest rates keep going up, all this debt that's been accumulated, how's it going to be paid back with higher debt? So cryptocurrencies are the alternative. Again, now this is important as well. You're Chinese. You can't buy, you're having a difficult time, I will say, buying cryptocurrencies. What are you going to buy? Gold.
Yeah, go ahead. Yeah, gold, exactly.
Gold. So this is what's going to happen as well. It's going to be a boost to the gold market when it becomes harder for different countries because they could put regulations on it any time. In Japan, by the way, you could go crypto crazy. They're allowing Bitcoin to be traded. So different governments are going to do different things. Now, one other element that no one's talking about, the millennial generation, China, go back to China. Go back to India now. When remember they pulled in all the rupees. They made it a cashless society. So you're no longer in God we trust, you're holding a currency. You're not attached to it. You want the best deal you can get. And that's why people are going to go crypto. And we believe it's a long-term trend with no end in sight.
Well, because it's also transportable. I mean, we talk about, well, if people are concerned about cryptocurrencies, they can go to gold. That's another store of value. But remember, we've had gold outlawed by our own president. FDR did that. And it was famously pointed out by H.R. Mencken. He said, hey, a year ago, if I had a flask of alcohol in my pocket and a gold coin, the alcohol was illegal, but the gold coin was legal. Now, here we are a year later, and the alcohol is now legal, but the gold is illegal. So this is arbitrary prohibition of stuff. We're seeing that from China, as you point out, with the cryptocurrencies, but we also see China and the BRICS talking about moving against the petrodollar. We had Venezuela say we're not going to accept payment in dollars anymore. We're going to use the Chinese yuan. We're going to use the euro. We're going to use different things. And we've got Russia now saying that they're going to stop using the dollar trade at Russian seaports. And so there is a push by Russia, by China, by others to try to get off the petrodollar to both save themselves as well as to harm the United States as well. So that's another factor that's coming into all of this.
Yeah, and also with China as well, they're now also taking in other currencies and trying to do away with the petrodollar. So well, you mentioned that, but also I'm just talking about oil trade in particular. They've made it very clear to Iran as well that you could trade in yuan. We'll give you yuan, but here's the deal: you could transfer it into gold, and you can't do that with the dollar. But the Chinese are going to allow that to happen. So again, yes, you're right. But here's the problem with why the dollar, we still see some elements of strength. Because as I just mentioned today, they're downgrading now Chinese debt. You have a debt to GDP ratio there of 300, a debt to GDP ratio of 300. So what are they going to use it as an alternative? Cryptos. Yeah, and that's why we keep going back to it, and gold. And silver.
And when you talk about the prohibition, I think it is harder for them to prohibit something that exists as a cryptocurrency because it's more easily transferable and transportable across borders. That's one of the key things when you're talking about a cashless society. You don't have a physical thing there like a suitcase full of paper bills or, you know, a suitcase full of heavy gold that you've got to move around. You've got an ID code that you can send around. We're going to talk more to Gerald CELENTE about financial issues, because this is a real big story. How do you store your value of your money, of your wealth? How do you store that? And it's going to, even if you don't have any money or wealth, it's going to create massive economic chaos if we lose the petrodollar. And there's a lot of big moves about that with the countries that we've just talked about. Stay with us. We'll be right back. I'm David Knight, Real News, and we're talking to Gerald CELENTE. Welcome back to Real News. I'm David Knight. We're talking to Gerald CELENTE. The question is, cryptocurrencies flying high or fading fast? That's the title of a Trends Journal article that Gerald CELENTE wrote. And of course, you can find his Trends Journal to subscribe. We are enjoying the benefits of a fiat currency here. A bubble speculative currency. We call it the petrodollar. There's multiple moves by Russia, by China, by Venezuela, by Iran, and others to move away from the petrodollar. How do you preserve the value of what you have? And so that's why a lot of people are looking at gold. They look at Bitcoin and other issues. Is Bitcoin or these other cryptocurrencies, are they safe? We saw J.P. Morgan's CEO say it's dangerous and stupid, and I would fire anybody who trades in this from J.P. Morgan. And then we hear the reports, so we see it in Zero Hedge. We've heard JPM traders bragging in the pub how much money they've made from Bitcoin. And when that started going around, then Jamie Dimon came out and said, well, that's not us. We're not buying that. We were doing that for our customers. So they're going to do something for their customers. They're telling their customers, hey, this is dangerous and stupid, but we'll help you do that. And so, just like they'll help you get fiat currency. Let's go back. We're going to go back to Gerald CELENTE, but just real quick, we've got a lot of items that are on sale. 50% off InfoWars Select Storable Food with the coupon code READY. 50% off Super Blue toothpaste and mouthwash. 50% off Caveman True Paleo Formula. 50% off all Emmerich's Essential Packs. And you can get an additional 10% off your entire order with the coupon code REALNEWS. Put that in at checkout. Enter the code at checkout, Real News, and you'll get 10% off your entire order, even if you're getting those products that are 50% off, or you get it on products that are not on sale. 50% off with the coupon code Real News. Gerald, you know, when we're looking at this, you pointed out in your article in Trends Journal, you said when Jamie Dimon and others are criticizing cryptocurrencies for their lack of intrinsic value compared to other currencies, what fiat currencies are they referring to? You talked about this in the previous segment. So the U.S. dollar, you said, for which the Federal Reserve prints on an as-needed, on-demand basis. When I talked to John McAfee, he said, look, you know, we mine Bitcoins. He said, I've got a company that mines Bitcoins. It takes us $1,000 in real costs in terms of electricity costs and personnel and the equipment. They've amortized it. It says it costs us $1,000 for each Bitcoin that we mine. We can't just turn on the printing presses like the Federal Reserve. So it's not quite exactly the same thing. And yet people are still concerned. Should they put it in gold? Should they put it in cryptocurrencies? And they're concerned about the manipulation away from the dollar. We've got Russia saying that beginning next year, they're going to make the ruble the main currency of exchange. That was pushed back by some of the shippers who are going to be using those it's going to be at Russian seaports. They're going to push this back. And these guys said, sorry, the ruble is too volatile. And they replied and said, well, if we make it the standard of payment, that will stabilize the ruble. And that's exactly what's been going on with the petrodollar for a long time. It's been this Ponzi scheme, essentially.
Yes, and now they're stuck, David, with this unwinding of all this quantitative easing. So let's put this into perspective. What have they done? They've raised interest rates, what, 3 times over the last 10 years? It's still next to nothing. And then if you take the inflation rate, even the fake inflation rate of the government over the last 10 years, what do you got, over 15, 20%?
Yeah.
So what I'm saying is you're still in negative rates. And all this is number one, it's a war against we the little people, the savers, because we have no place to put our money. Once upon a time, they had a thing called interest rates, and you would put your money in the bank and you get interest on it. No more. So now,
and they used to have usury laws where they couldn't charge you with credit cards like they do now, you know, 20, 30% or something. They had usury laws and they actually paid interest and the spread wasn't that big. But now they pay 0 interest rates, or some cases negative interest rates, while they're charging credit card holders 20, 30% or more in interest rates. It's an amazing racket.
Yeah. And again, you know, it's all this deregulation. I think Carter was the one that started deregulating usury rates. And so what they're going to do is they're still printing cheap money. That's the bottom line. And now the guesses are that they may raise, it's a 70% shot they're going to raise rates in December and maybe 2 times next year. That's not going to do anything to slow things down. So what we're saying is it's still money not worth the digital paper it's not printed on. And they're just going to keep printing more of it. So they're still keeping the Ponzi schemes going. Even if they raise these rates a tiny little bit compared to where they were back in, 2006, and they're nowhere, man. So there's still junk money, and people want a safer currency. Oh, and then there's the other thing, geopolitical instability. So that's nice to have those alternatives because, if things blow up, at least you got a place to go and get your money, and it doesn't have to be in the bank, which they just closed.
Yeah. That's the thing that's been driving the cryptocurrencies, being independent of these central banks and being transportable to be able to move it around. Gerald, you're talking about the interest rates going up and how they've done this now 3 times since President Trump was elected. They're going to do it presumably another 3 times in a row. It reminds me of the interest rates moves that we saw that caused the pump and dump in the mortgage business as well, because we saw them continually lowering interest rates, leaving them low for mortgages and then raising them and creating that crisis. But now this debt is so much larger and it's spread out with these different governments. And that's what people need to think of when they think of the consequences of what could happen as they start to continue to raise these interest rates if they got everybody fully loaded with debt. This is something now that is much bigger than just the mortgage market, but so the damage that could be done is far bigger than what we saw with the mortgage market, but it would also include the mortgage market as well.
Oh, yeah. Here's a story from Financial Times. Big story. Rate rises threaten global growth, warns Bank of International Settlement. The world has become so used to cheap credit and that higher interest rates could derail the global economic recovery, the Bank of International Settlement has warned.
But they're going to do it anyway.
Again, what they're going to do, they're not going to be able to raise them much. So the Ponzi scheme's going to continue, and they all know it. And that's why they're not talking a lot about the how they're going to do it. So basically, we believe they're going to keep the Ponzi scheme going, give it different kind of names and what they're going to be doing, but still let that cheap money flow. And again, goes back to why people are going to keep going into cryptos and gold. They're going to have their ups and downs, but we still see it happening for the betterment of people looking for alternatives as their fiat currencies are worth less and less.
And I think it's interesting, too, you know, when we look at this recent dip that came out there, you had a couple of different individuals. You had a billionaire investor, Howard Marks, come out and say Bitcoin is not real, and you had Jamie Dimon say it's dangerous, it's stupid, and it dropped, lost about a quarter of its value, but then within days it was back. And so I think you are correct when you're talking about this. And in Trends Journal, you say your ongoing analysis and tracking of a no more cash trend, you say it's one of our top 10 trends for 2017. A global sprint towards digital currency is unfolding and turning into a mad dash. And it's not just a bubble without a cause. It is because, as you just pointed out, people need to have some alternative store of money as we see this shaky fiat currency situation with all the central banks and with the petrodollar now under assault from multiple angles. What they're doing in Russia is a microcosm. They understand what the game has been for the petrodollar for a long time, and they understand that if they mandate that people who come into their ports use the ruble and so forth, they know that that's going to help them. It's going to stabilize them. That's the game that we've been playing with the Saudis for a long time.
Exactly. And again, they're ending it. The more sanctions America puts on different countries, as I mentioned, you have a country like China. This is really a big one, where they're saying, no, we're going to take the Russian oil and the Iranian oil and the Venezuelan oil that you're putting sanctions on, but we're going to pay you in yuan, not petrodollars. Oh, and you don't want the yuan? That's okay. You could cash it in for gold. I mean, that's really big news that's not making the news. So that
I think it's kind of funny, Gerald, you know, they all say Trump is going to create a trade war with all this America First stuff, and yet they're the ones who are creating the war against our currency with their sanctions, aren't they?
Of course. And that's what they're doing. I mean, it is. So they're not going to stop trading. They're not going to go out of business. But again, it's very important. They're trading in their own currencies. Their people in those countries don't want their currencies as their currencies devalue. So again, the average person starts going to cryptocurrencies and gold.
Well, you know, I've been really fortunate, and I feel like I have actually been groomed for this moment in time because my uncle was a major dealer back east. So I actually started in gold and collectibles when I was 10. And I got a great education at his knee. Now, my father was a real estate developer, so I went into banking when I was 15. I stayed in commercial banking until 1986, and then that's when I transitioned over and became a stockbroker at Shearson. I worked first with treasuries, which is really about debt and interest rates. And in that capacity, I stumbled across what was called non-dollar denominated bonds, which are simply bonds that are issued in different currencies. And that's when I really started studying currencies. And I definitely do consider myself an artist. And so when you start to study currencies, then you start, and especially when you go back in history and you start to look, you see a pattern. And it wasn't in my gazillions of economics classes, mind you, that I saw this pattern or was even introduced to the theory of currency life cycles. But when you study them and you start to see something that happens, 100% of the time, and it follows the same path, it's a pretty obvious pattern once you recognize it, once you know what to look for.
Okay, so let's talk about the currency then that is going to be close to home for most of the viewers living in the United States or Canada. What is the life cycle stage for the U.S. dollar right now? Because it's been doing quite well versus other fiat currencies and even gold to some extent since 2011.
Well, you know, there are a couple of interesting things in that. Number one, gold is the primary currency metal. So when you make that comment, when we transitioned completely off the gold standard, they started to treat gold and tried to get us to think of gold like it was just merely a commodity. And as such, it traded as a mirror image to the stock market. So if stocks went up, gold went down. But then I came here in 2002 after about 5 of my formulas had confirmed that we were in the end stage, the final phase of not just the US dollar's life cycle, but actually the fiat money life cycle, which really started in the 70s. And so so there's no doubt. Now, you referenced the dollar as being strong or weak against other currencies. But, the only way that that impacts us in day-to-day use is if you happen to be traveling. And so you'd like it if the dollar is stronger because it enables you to buy more of the other currency. But what really impacts us, and what I like to talk about a lot, is the purchasing power value of the dollar, which officially is at 4 cents according to the Federal Reserve. So there's really not much purchasing power left, though the same could be said for every other fiat currency. This is a fiat money life cycle, not just the dollar, I guess is what I'm trying to say.
Now, when I look at the world, I see a lot of bubbles, and I'm sure you do too, whether it's the currencies or the stock market or the housing market. Now, here's the thing, and this is where a lot of people will study currencies or Austrian economics, and there's a big split. And let me just throw this at you. With the stock market and real estate market, and I'm making an assumption here that they're in bubbles, and also making an assumption that you may agree. If they collapse, that's going to be deflationary because the dollars will be able to buy more house. They'll be able to buy more stock. So does this feel like hyperinflation, but we're actually heading into certainly perhaps a deflationary shock prior to any actual currency bubble bursting?
Well, that is actually where we are, and have been since August. I think it was August 2015 is when we entered the deflationary part of this trend. But you see, there's only one way. It's not like there's a ton of options. There's only one way to fight deflation, and that is with inflation. And so just this year alone, in fact, I just finished doing this for a webinar I'm going to do at the end of today. But since the beginning of the year, the central banks have added almost 2 trillion more new, not just dollars, but new money into the system to keep the stock market afloat, the bond market afloat. And that's really the biggest bubble, is the bond market, the debt market. As well as the real estate market, because the other huge bubble is derivatives. And the derivatives are based upon the price action of the underlying. And the global banks are very close to being insolvent. So they can't really afford much of a price movement down before there would be a huge derivative event triggered that the ISDA can't hide and that the central banks can't reinflate. And I just did all that data on it this weekend, so it's fresh in my head.
Yes. So what is the most likely scenario that you see unfolding here, specifically when it comes to how will the central planners respond? Because I mean, look, this is unprecedented in scale, certainly a global crisis, and I guess there's so many wild cards out there, right? Like the U.S. and the IMF, they could come out and blunt all of this crisis with a new currency, or maybe they'll respond with a new currency into the crisis. How do you see it unfolding?
Well, it's interesting that you brought that up, because the question is all about confidence. And it's really just been the confidence of the masses that have enabled them to keep this thing floating in an attempt to get the new money standard in position. So, which is what the cryptocurrencies, Bitcoin blockchain, the ICOs, what that whole piece is about, is developing that comfort level. So I don't think that they're going to blunt it, because I don't think they want to blunt it. I don't think they can really blunt it, because there's no buyers on the other side of any of these trades. So by keeping all these markets floating upward, what it really does is it creates that nominal confusion, which they've used so well over these years, and it inspires people to stay in these extraordinarily overvalued markets. The problem is that there are no buyers on the other side. And as confidence erodes, and there really is, well, according to the Gallup polls, only 6% of the American public has any confidence in the Congress. So the confidence in the government by the public is gone. Miraculously, they're losing confidence in Wall Street, but they sure like what the stock market's doing. So they have hope. I'll say they're on hopium, in there. But when a lot of people try to liquidate, they're going to find that these markets are going to be shut down because in this country, the riskiest bank is Morgan Stanley with a leverage ratio of 3.57%. Morgan Stanley's overall assets drop 3.57%. They are finished. They are insolvent. And because globally, all of these banks are systemically interconnected, it really doesn't matter where the crisis really begins. It's going right through the whole system to every single financial product. I mean, that is really the bottom line.
Yeah, no, it's shocking just how little it would take just to be that last straw on the camel's back. So for the blockchain and Bitcoin, it's not two separate. I know that's one and the same, but there's the blockchain, which can be very useful for many things in our lives and the internet and keeping track of let's say title for properties. And then there's Bitcoin, the currency. Now, you had mentioned that you thought the central planners might be in favor of Bitcoin or some sort of normalization to digital currencies. So do you believe Bitcoin is being used as a tool or being looked at as a tool by the central planners?
I think that yes, absolutely. I think Bitcoin is being looked at as the gateway to get global acceptance and individual public acceptance of cryptocurrencies. I don't really think that's going to be the end all be all. I think it's going to be an SDR coin. And I think regionally we might have the dollar coin. There could be a euro coin, something like that. But I think that it's being used as a tool to develop public comfort and confidence in that system. But it's still inside of the system. And we just saw China. I'm going to read this. I was looking at the Wall Street Journal today, and let's see where it is. Oh, digital coin mania takes a hit in China. And China is the biggest user of Bitcoin, by the way. Chinese regulators on Monday declared initial coin offerings illegal. Okay, there's no way. People think that they're going outside of the system, and so they're even rushing to it. If we could get people to just stop, take 3 deep breaths, and think about this with logic instead of being blinded by the gains that they're allowing in these cryptocurrencies to sucker you in. I'm not saying that there aren't good things about the blockchain technology, because clearly there are. I just don't want everything there, which is what the central planners want, because then it's easier to control.
Now, the central planners fully control the fiat currencies, which are centralized. Bitcoin is not centralized, and nobody can control it. So what is their angle here? Because we already trust digital currencies, especially if you're a millennial like myself. We haven't had money in our wallets for the last 10 years, or a currency, excuse me. So what is their angle with Bitcoin? Because it is decentralized and not controlled by them, but they already have full control of their currencies.
Okay, so let's kind of back up with that. Number one, they don't have full control over cash. Cash actually prevents central banks from going below zero to the degree that they want to. Because now that they've taken most of your purchasing power, they have to attack principal. So they want to get rid of cash because like gold put restrictions around what they could do back in 1913 and 1933. They took it away from the public. Cash does the same thing to them now in restricting what they can do. So I know with the millennials and younger than that, you are very, very used to digital currencies. And I also know that the way that it's being sold as decentralized. But I don't know if you're aware of this. Do you know that China, their government is also quote unquote decentralized?
Look, I'm not aware of the details of the Chinese government other than it's a communist leader and a party.
Well, this is an area that you really might want to seriously look at, because China has been chosen to develop the market for SDRs. And so they've really been really the cutting edge, and they certainly with their technocratic, which is all about governments, it's all about systems. You need to be a lot more aware of what's happening there, because that is going to impact the globe. And that is what the central planners, that's the kind of technocracy, government, and control that they want. But going back to the fact that it's decentralized, all that really means, and I know how people perceive it, and that's called perception management. But all that really means is that power is allocated to certain resources, to certain locations. However, at the end of the day, there is still one place, and governments and central banks have been in control of our money forever. They are not just going, oh, okay, here. So plus, if I don't know if you've looked, so here, the Chinese government is saying no more ICOs. They're now illegal, gone, done. They also say that the IRS now has a tracking tool that can be used or is being used to track everybody that is in Bitcoin, so they can't avoid taxes, etc. And as I saw in the research with Octane, though they're not the only ones, the banks, the corporations that have been spending trillions of dollars and trillions of man hours in developing the cryptocurrency, at the end of the day, that's what's going to allow to be legal. Not anything that goes around the system. It's not going to happen.
So just to be clear, the Chinese have outlawed ICOs, Bitcoin competitors, but not Bitcoin.
Well, they have, let's see, Monday declared initial, so it would be all initial coin offerings are now illegal.
Okay.
So not Bitcoin particularly, though there are, what was it, last March, just before they decided, we really want our population going much more in this direction. But all they had to do was add a couple of little fines and laws, and the Bitcoin exchanges dropped 97%, almost 100% in usage. So,
all right. Well, let's talk about gold. So at ITM Trading, you guys sell gold as well, correct?
Oh, correct.
Okay. So what kind of gold? Because this is probably the most popular question I get, and probably the most popular question you get. What gold do you recommend, or how do you structure a gold portfolio?
Well, that's a great question. I'm definitely, all of us here are on a mission. And when I was doing my studies on currency life cycles, you see those repeatable patterns, and you position to, number one, sustain your standard of living, and then number two, take advantage of the wealth transfer mechanism. And so those are different, there are different tools for different jobs. If what you're looking to do, and you should have a diversified portfolio, which means some gold, some silver, some asset protection, as well as some growth. So what you need for a barterable portfolio are fractional coins, so an ounce and then smaller than an ounce. And I personally have a tendency to like to have more of the smaller pieces, only because it is easier to put two dimes together than to break a quarter in half. And during these periods of time that we're preparing for, change becomes irrelevant. So I want a variety of just basic silver and gold in a variety of sizes to take care of my day-to-day living expenses. The gold is more for property taxes, which have a tendency to skyrocket during these periods of time. We can see that in Illinois, what's happening there. Their property taxes have more than tripled, and gold maintained their ability to pay the property taxes at the same amount of money. So there is a strategy that we utilize here. And if you talk to any one of our brokers, they all are familiar with it. And it's based upon, it's simple. They'll be able to explain it really simply to you because it is about sustaining your current standard of living. And for that, that's that barterable portfolio. But growth is about positioning yourself to take advantage of income producing opportunities as they evolve. And
like homes, or you're talking about other hard assets?
Yes. Any income producing assets. I did a study several years ago, and I looked at what happens to all the different asset classes during these transitions. And what I discovered, globally on average, residential real estate drops 55%, commercial drops 75%. Now, personally, I think because this is global, it's going to look more like what happened to Japan in the early 90s. And that was residential real estate dropped 85%, commercial real estate dropped 95%. So when the government does a reset, or the central banks do a reset, they reset those dollars that have no intrinsic value against monetary gold that's all intrinsic value. And that's when you'll see gold. I'm not saying it won't rise before this, but that's when you'll see it express somewhere near its full fundamental value. So that means that's going up while the other income producing assets are going down. Now you take some of that growth gold and you convert it into those assets that can generate income for you. Whether that's dividend paying stocks is another option, but we're going to have to see who's going to be able to survive the reset. All the debt, that's the biggest bubble.
Sure. Now, we've seen recently China and gold over the last 5 to 10 years take big steps into not only taking possession of physical gold, but China's been on a rampage buying gold mines and their sovereign wealth fund, which, basically it's China buying massive stakes into mining companies. So do you see China, Russia, or the world moving to some sort of gold standard, or is this just China and Russia and others hedging in case this thing gets out of control?
No, that actually what happens when people are bloodied, battered, bruised enough, all confidence is lost. That's really, I'm not sure whether it'll be the confidence that piece that forces the hyperinflation or the hyperinflation that forces the loss of confidence. But one way or another, by the time we go through this reset, populations will not trust government. They will not trust bankers. They will not trust. That's why they need a trustless system, hence the need of cyberspace money. But because they've also talked about what happens to those other cryptocurrencies. Yeah, I think they're going to have to put a component of gold back in the system. I'm not saying 100% back, but some component of gold to stabilize the money standard and then inspire confidence, just like Roosevelt did in 33 after the markets imploded. And in 29, and we were in the Great Depression, and you can trust the good money, the money system, because it's backed by good money, which he was referring to the gold that they had confiscated. But that's something that happens 100% of the time, not just here, but everywhere. Ultimately, you've got the gold, which is the primary currency metal and holds its value over time, which is its most important function. That's what's going to inspire confidence in whatever the new money standard is going to be, which I'm pretty certain is blockchain technology with a smart contract over it.
Last question, Lynette. Do you see the timing of this happening under President Trump's term in office here?